Hi guys, welcome to the month of February. Before we move on, let's look at how Nigeria performed in 2024. So let's start with Nigeria's 2024 report card. Despite the hardships faced in 2024, the economy remained resilient and the GDP grew by 3.46% year on year, which was actually facilitated by significant growth in the information communications technology sector, the finance sector, and the mining sector. Additionally, oil production increased slightly to 1.48 million barrels per day, contributing to the government's revenue. And lastly, the market capitalization stood at the staggering 61.9 trillion naira, which showed increased investments in the stock markets for Nigeria. These numbers paint a mixed picture. Nigeria is struggling but is still moving forward. However, the real concern now is, will these trends shape 2025? Stay with us, let's have a look. This brings us to our next area of concern, which is inflation. The question is, will inflation finally stabilize? Well, looking back at 2024, the cost of living crisis hit Nigerians hard in 2024, where the prices of food went up to 43.1% for core inflation. And this was actually caused by inflation increasing by 35.3% in the transportation sector, 31.6% in the utility sector, making it difficult for families to afford basic needs. The removal of fuel subsidy and the naira's depreciation further mitigated the government's efforts to reduce inflation, and which made the price of goods and services worse in 2024. And these were the main factors that led to the 34.8% inflation rate as at December 2024. The next question now is 2025. What is our outlook on inflation in 2025, or can we expect a relief in 2025? Well, the good news is yes, we can expect a relief, because inflation is actually estimated to slow down or decelerate at the rate of 30% by the end of 2025. And this is due to the CBN's tight monetary policy, which is aimed to control inflation by keeping interest rates high. Secondly, the government's agricultural sector reforms could actually improve food supply and reduce core inflation or food inflation, which can, in the large run, reduce the prices of goods and services. And additionally, increased security spending in the proposed budget for 2025 also increased by 12% to 16%, and this is actually expected to stabilize food production regions in the north. However, we need to be wary because we are not just out of the woods yet. Why? Because rising prices in the telecom sector and the power or energy sector could actually mitigate or change the scales of inflation in Nigeria for 2025. And although we are expecting inflation rate to reduce, we are looking at a spike in the telecom sector and in the energy sector also, which could actually offset this delicate balance in our economy. The next question now is our GDP. So how was the GDP like in 2024? Or let me rephrase that question. Can Nigeria actually regain its economic strength as it has done before in previous years? Well, first of all, let's look at what happened in 2004. For years, Nigeria was actually Africa's second largest economy, but in 2024, due to inflation and majorly the currency depreciation, Nigeria slipped to the fourth place. What caused this? Just as we have mentioned before, there are issues related to inflation, which includes currency and the naira depreciation. These are the major factors, and the exchange rate unification. These factors actually contributed to Nigeria slipping to the fourth place in terms of Africa's largest GDPs. In 2024, however, our GDP remained resilient despite triple shocks of inflation, exchange rate depreciation, and high interest rates. And our GDP was actually 3.4% increase year on year compared with 2023. And as at the third quarter of 2024, the overall GDP contribution actually came from sectors like manufacturing, information technology, agriculture, mining and quarrying, and financial and insurance sector. And in terms of ranking, the financial and insurance sector, followed by the information communication sector and the mining sector, actually brought in the largest or the most significant increases in GDP. Additionally, the rollout of technology like the 5G and the broadband growth, increase in banking activity, increase in the capital of banks, higher crude oil outputs, and some other factors actually contributed to Nigeria's GDP resilience, which actually gave us the growth of 3.46% in 2024. What do we expect in terms of Nigeria's GDP for 2025? Well, it's simple. First off, the GDP is actually projected to grow at a 3.88%, and this is actually driven by more investment in ICT, mining, and agriculture. And these were the sectors that actually contributed to the significant increase that was previously discussed. Additionally, we are also looking at a higher crude oil production per barrel, which is is at 1.48 million per barrel already, and we are looking at an increase to over 2 million barrels per day. However, there are several obstacles that remain. The first obstacle is the high interest rate, which as of December 2024 was at 27.5%, which is making it expensive for businesses to access capital and is also slowing down the growth rate or expansion in terms of businesses. Additionally, we still have security issues which continue to disrupt economic activities and also reduce investor confidence. And let me remind you, security issues also affect our oil production. And lastly, Nigeria still relies heavily on food imports. We still rely heavily on food imports, as big as this sounds, making it vulnerable to external price shocks. Conclusively, in terms of GDP, for GDP's growth to have a real impact, Nigeria, as we have started to do, must actually address structural issues like food production, infrastructure, and job creation. Now, moving on to the third item on our list, which is fiscal policy. Fiscal policy. Fiscal policy is an economic term that is usually used to measure government expenditure and taxes. So basically, government expenditure and taxes. So what happened in 2024? Firstly, government boosted tax revenue by 73%, a whopping 73% year on year, with VAT and corporate tax collections rising significantly. However, public debt is growing at an alarming rate. Nigeria's public debt reached 134.3 trillion in 2024 and is also expected to hit 187.79 trillion in 2025. What does this mean for we Nigerians? First of all, what this means is the 2025 budget adds 7.4 trillion in new debt. So this actually raises concerns in the areas of debt sustainability, just like we saw that the debt servicing for the proposed budget actually exceeded capital expenditure. So when these kind of issues start occurring, we have to start getting, a little bit wary of the things that we are going to be expecting in 2025. So additionally, economic stability bill also aims to attract foreign funds, and we are actually grateful for that. But we are not sure if the economic stability bill is actually going to be able to withstand these economic turbulences in terms of inflation, in terms of debt, in terms of foreign exchange, in terms of attracting capital inflow and what's not. So for 2025, before we can actually say we want to improve our fiscal position in Nigeria, we have to first of all tame our rising debts, both domestic and external debts. And also, we have to be able to actually allow businesses to actually do their thing in terms of we have to promote growth in terms of production, we have to produce more, we have to build more businesses, and we have to actually find more capital inflow to actually sustain the economy. So what are we looking out for in terms of fiscal policy in 2025? Well, for 2025 actually promises to be very interesting with a newly proposed tax bill by Mr. Taiwo Oyedele. I know you'd have heard of that name very well. So yeah, Mr. Taiwo Oyedele. So he has actually brought in a lot of, positive tax reforms which are poised to actually transform the Nigerian economy positively and also correct a lot of structural issues in terms of how we actually generate taxes in Nigeria. So the first one I would like to discuss is the new VAT sharing formula, which actually provides 35% for local government, 10% for the federal government, and a whopping 55% for state government. So that is the proposed new VAT sharing formula, guys. Apart from that, we are also seeing a new personal income tax structure where people who earn less are actually taxed lesser and people who earn more are actually taxed higher. Additionally, we are looking at more zero-rated goods in terms of intellectual property, in terms of medical property, and in terms of some other commodities. So these are actually goods, services, and intellectual properties that can actually be exported, and this idea of making them zero rated is actually poised to actually encourage exports and attract foreign exchange. So I'm actually happy to hear about things like this because it's actually going to push the economy forward in the right direction. So moving on to the next item, which is the monetary policy. So what happened in 2024? Well, 2024 was actually a very, very crazy year for monetary policy. Why? Because as the CBN, even before the new CBN governor, Mr. Cardozo, the previous CBN governor, Mr. Emefiele, actually tried to tighten the money supply in the economy and brought about some new initiatives. However, since they've started to tighten the monetary supply in the economy, even up till now, the money supply has actually continued to grow and grew at a 48.2%, reaching 107.7 trillion in October of 2024. This actually caused the inflation rate to surge to 34.6% in November 2024, and this was on regarding the increase in the monetary policy rate, or the MPR, to 27.5% in December of 2024. The CBN has also tried to introduce some new ideas or new initiatives to control the foreign exchange and, try to balance our exchange rates by introducing new operational mechanisms for bureau de changes, by adjusting the remunerable standing deposit facility cap, trying to clear the foreign exchange backlogs, reintroduce the retail Dutch auction system, and even brought about a new system, which I'm going to discuss in the next slide. And even with all these new initiatives, on the official website, the exchange rate still continued to depreciate to 42.1% from December 2023 by 42.1% from December 2023, which was a movement from 899.3 naira per dollar to 1,553 naira per dollar. And this was driven by shortages in foreign exchange and increased demand for a certain foreign currency. Well, guess what that currency is? The dollar. So for 2025, what are we actually expecting to happen in 2025? Yes, so to be honest, we are not actually seeing a reduction in the MPR rate anytime soon, despite the global trends where central banks are actually easing out because of the current inflation situation that we are trying to tame in Nigeria. So for 2025, the CBN's monetary tightening and elevated interest rates may actually lead to higher lending rates, making borrowing more expensive for businesses, like we have mentioned before. Additionally, the CBN may also likely tighten its monetary stance in 2025 with an elevated interest rate, which actually focuses on achieving long-term price stability. But here is the catch, right, guys? So with all this long-term price stability and all these things that we are discussing, we are actually looking at the possibility of 1,750 naira to the dollar as at the end of 2025. Although this is actually a reduction, it's actually a more safe or more cautious estimation. So because we know how volatile the naira to the dollar is, there is also the brighter side, because the CBN has actually introduced a system which is the EFEMS system. So what is that system? That is the electronic foreign exchange matching system. So this system has actually brought about an increase in the naira, the value of the naira, even with its early introduction in 2025. And we are looking at a further increase in the value of the naira due to the operation of this system. However, we are predicting 1,750 naira to the dollar as at the end of 2025. So in January 2025, Nigeria actually joined BRICS. BRICS, yes, guys, Nigeria has actually joined BRICS. So what is BRICS? Is BRICS a new economic opportunity, or is it just a symbol? So yeah, access to BRICS is actually going to bring about some advantages. So one advantage is new trade and investment opportunities for Nigeria, and we are actually going to gain access to more debt provided in local currencies. So what does this mean? This means we're going to actually have less reliance on foreign currencies like the dollar, which has actually been plaguing the Nigerian economy, and we are going to also have reduced reliance on Western financial institutions. And also, let me just bring this to you guys. The BRICS actually controls 37.3% of the world's GDP. So that is how significant this economic alliance is. But what are the downsides? The downsides are Nigeria is going to actually be in cahoots with the US, because we know that Russia is one of the major players in the BRICS, and the US and Russia are not actually in good terms. Additionally, we are actually going to reduce our reliance on the dollar, which is something the US is actually going to frown at. And also, Nigeria is not a full member of the BRICS, and we have no decision-making power. However, despite all these factors, I think this is a move in a positive direction because of the new legislations that Donald Trump is making, which is actually going to affect everybody. Now, everybody is picking sides, right? So everybody is looking for the country or the organization which is actually going to provide them with the best safe landing possible. So I think Nigeria joining the BRICS is actually a move in the positive direction. So what we are saying in conclusion is that 2025 promises to be a great year for Nigeria, as we are seeing an increased economic growth rate of 3.88%. We are seeing inflation decelerating by a slight, percentage from 34.8% to 30% at the end of 2025. Nigeria has joined BRICS, which is actually going to provide access to, debt capital, and is actually going to provide, more trade and investment opportunities. And we are also seeing a lot of economic reforms in terms of the tax reform bill and some other NTBs, which are actually going to push the economy in a positive direction. Additionally, we are also seeing the CBN not slowing down on its monetary policy in terms of tightening the money supply in the economy. So the NPR rate, which is at 27.5%, we are not seeing the NPR rate reducing anytime soon. So guys, what do you think about my outlook? Do you think the economy is actually going to get better, or is actually going to remain the same? So put your comments in the comment section. I'll be expecting to answer any of your questions and to also respond to any of your comments. So thank you guys. See you next time.